Okay, so why would you get a FHA loan if you qualify for a conventional loan, right? So I'm going to paint a hypothetical client right now. And let's say you are someone buying a single family house and you're looking at a $500,000 price range and you have the ability to put 10% down, but maybe your credit score is somewhere in like the 650 to 680 range. Technically, on paper, you qualify for a conventional loan, but your loan officer is also telling you, hey, let's take a peek at FHA loans because even though the conventional loan you qualify for and per se might be better, you might be also better off in the FHA loan. And let's take a peek at it, right? And the main reason why you might want to go from a conventional loan, even if you quote unquote qualify for a conventional loan, underwriting works, debt to income works, it's all there. You don't technically have a bad enough profile to qualify. But what I've noticed over these past few years is there's a sweet spot for clients, unless you're putting 20, 30% down and you're completely avoiding mortgage insurance. If you have a credit score between 620 and 700, and you're putting down between 3% and 15%, maybe 10%, because at 15, you could start making conventional make a little bit more sense. But here's the reason why there's a sweet spot there. If you're in that FICO score range and you're mulling over FHA compared to conventional. Conventional goes off of your credit score, debt to income, your profile, your down payment, very heavily when it's related to the interest rate you're offered, as well as the mortgage insurance. Mortgage insurance, separately priced thing compared to the conventional loan, which means that I take your profile, I take your credit score, debt to income, all those numbers that unfortunately make you not a human, and I put them through a quote machine and I get mortgage insurance quotes, right? And I also put it through a pricing machine to get interest rate quotes based on your profile. Those two categories, if you're below 720 right now, and you're putting less than 20% down, those two categories unfortunately are being dragged through the mud, right? Mortgage insurance is going to be very expensive for the most part. And then same with the interest rate. It's going to be really high relative to what you're seeing out there for fair market rates, right? It's going to be much higher. FHA, however, interest rate not as negatively impacted due to credit score. They go all the way down to 580. You really don't start seeing a massive drop in pricing for the interest rate until you're below 620. If you're above 620, you're getting pretty good interest rates with FHA, even all the way down to 3.5% down, right? Mortgage insurance. Mortgage insurance with FHA is a chart based on down payment percentage and loan amount. It has nothing to do with your credit score. If you qualify for FHA financing, you qualify for whatever the mortgage insurance is based on the chart that I just brought up. It's not a separately priced thing. It is not technically private mortgage insurance. It's FHA mortgage insurance. So it's just part of the program. So the best thing to do in that situation is you just compare apples to bananas, right? You look at the conventional loan pros and cons. You look at the FHA loan pros and cons, right? One might be better than the other financially. Conventional might unfortunately get your offer accepted. So you've got to weigh the two there. And then you've got to create kind of a risk. Like if they're pretty close to each other, you're probably going to go conventional because the conventional is going to give you a leg up in a competitive offer situation because FHA has some stigma to it in the market. It has some restrictions due to the property that, are a little bit bloated and overplayed, but it is what it is. We got to, got to play in the sandbox that we have. So conventional might win if you're pretty close, right? Maybe there's a $50 difference in payment, same cash out of pocket. So conventionals a tinge more expensive, you might lean that way because the benefit in the market. But if you're looking at a delta of 200, 300, $400 payment difference, unless you're willing to take that on, you might have to go with the FHA because it's just a better financial option and then try to win an offer scenario in a competitive situation, even though you got a little bit of a leg down because of the FHA loan, right? So that's a hard thing to wrestle. That's something I go over with realtors a lot, clients a lot as to, Mike, why are you recommending FHA right now, even though I technically have a good enough credit score for conventional? And usually when I show them the two scenarios of here's the mortgage insurance, here's the interest rate conventional, here's FHA, the FHA usually wins again if you're in that sweet spot of less than 15% down, ideally less than 10% down. If you're between 3 and 10% down, 620 to 680 FICO, which again, on paper, works for conventional. It's not going to look pretty with the terms. FHA's, their terms don't really move much So you just compare them next to each other and take a peek and go over the pros and cons. So that's the scenario where I qualify for conventional, but I'm going with the FHA because it just makes more financial sense, right? And that's it.